Right now, we are all living through one of the biggest, boldest investment bets in the history of humankind. We're talking about a mind-boggling $500 billion gamble on artificial intelligence. So here's the big question on everyone's mind. Is this the single greatest opportunity of our lifetime, or are we just watching the biggest bubble inflate since the dot-com crash? All right, let's get into it.
So here's how we're going to break this all down. First, we're going to try and wrap our heads around the sheer scale of this bet. Then we'll look at both sides of the coin, the case for a true revolution and the counter-argument for a massive bubble. We'll dive into a really important cautionary tale that puts NVIDIA right in the spotlight. Then we'll expose a critical bottleneck that could slow everything down, and finally, we'll piece it all together to give you a framework for how to think about all this.
Okay, so let's start with the money, because you really have to follow the money here. It's so important to understand that we're not just talking about a lot of cash. We're talking about an investment on a scale that is genuinely historic, almost unbelievable.
That's the number, $500 billion. That is what's being poured into AI infrastructure. We're talking data centers, chips, cooling systems, the whole shebang, in just one single year. It is a staggering amount of money, the biggest single-year investment bet in history, period.
And just to give you some perspective on what $500 billion really means, it's more than the entire annual economic output of developed countries like Poland or Thailand. I mean, this isn't just a market trend, this is a global economic force we're talking about.
And get this, it is not slowing down. This isn't a one-off thing. Projections show this spending is actually set to grow even larger, hitting an estimated $527 billion by 2026. This is a sustained, multi-year flood of capital.
So who's writing these massive checks? Well, it's the biggest names in tech. Microsoft is planning to spend $80 billion. Meta's on the hook for $65 billion. These aren't just little side projects. For these companies, these are full-on bet the company gambles on where the future is headed.
Okay, so why? Why this absolutely massive spend? The people making these bets are some of the smartest, most successful capital allocators in the world. So let's look at their side of the story, the case for a genuine AI revolution.
This is the prize they're all chasing, $16 trillion. That's what McKinsey thinks AI could add to the global economy by 2030. Now look, if that number is even close to being right, then spending $500 billion on infrastructure today starts to look like an absolute steal.
But it's also about more than just profit. For companies like Google and Microsoft, this is an existential fight for survival. Falling behind on AI isn't an option. If you don't build out these capabilities right now, you might not even be around in 5 years. And that kind of fear, well, that's a very powerful motivator.
And hey, we're already seeing this shift from being a cool science project to becoming a real business. Microsoft's AI division, it's on track to hit $10 billion in annual revenue. Products like GitHub Copilot and ChatGPT are already generating billions from millions of paying customers. The money is actually starting to come in.
Okay, that's the rosy picture. But there's a whole other side to this coin. And the arguments against this boom, they sound eerily familiar to anyone who remembers the late 90s. This is the case for an AI bubble.
This is it. This is the simple, yet frankly terrifying question that analysts at Goldman Sachs are starting to ask. Hundreds of billions of dollars have been spent, but where is the proportional return? It's a question that is making Wall Street very, very nervous.
And here is the brutal, cold math behind that question. The Goldman analysis suggests that for every single dollar being spent to build all this AI infrastructure, companies are only seeing about 10 to 20 cents come back in actual revenue. In the long run, that math just doesn't work. It's not sustainable. And if you dig a little deeper, some of this revenue might just be an illusion. Take this whole situation. Microsoft invests a ton of money into OpenAI. What does OpenAI do? It turns around and uses that money to buy computing power from Microsoft's cloud service, Azure. Then, Microsoft gets to book those sales as revenue. It looks like incredible growth on paper, but is it just money moving around in a circle?
This whole question of hype versus fundamentals brings us right to NVIDIA, the absolute poster child of the AI boom. But to really understand the risk here, we need to look back at history's most powerful analogy, the dot-com era, and one company in particular that tells a fascinating and cautionary tale. Let me tell you a story about a company called Cisco. Back in 1999, Cisco was king. It made the essential routers and switches literally the backbone of the internet. Its stock was unstoppable, hitting a peak of around $80. And you know what? The internet did change the world just like everyone predicted. But today, a quarter of a century later, Cisco stock still trades for less than it did at its peak.
I mean, the parallel is pretty striking, isn't it? NVIDIA today is the Cisco of the AI boom. It provides the essential infrastructure, the GPUs. Its stock has gone completely parabolic. The technology is absolutely real, just like the internet was. But the multi-trillion-dollar question remains, is the valuation based on fundamentals, or is it pure hype?
Okay, so beyond all the financial stuff, there is a massive physical problem looming over the entire AI industry. A problem that could literally grind this whole revolution to a halt. This brings us to the AI boom's dirty little secret. It's absolutely staggering power consumption. These new data centers require a mind-blowing amount of electricity. We're talking about single data centers consuming as much power as an entire city. So there's a very real question of whether our electrical grid can even handle this planned expansion.
And this power crunch is forcing these tech giants to get, well, pretty creative. They're signing direct deals with nuclear power plants, and they're exploring brand new technologies like small modular reactors. And why? Because building traditional power plants takes years and years, and they need that energy now.
So you've got this world-changing revolution on one hand, and a potential everything bubble on the other. How on earth are we supposed to make sense of all this? Let's try and build a simple framework to help you navigate this landscape. And to be clear, this is not investment advice, just a way to think about it clearly.
You can really break the market down into two main buckets. First, you've got the infrastructure players, like NVIDIA. Think of them as selling the shovels in this new gold rush. They are making real, tangible profits right now. Their biggest risk? Their stocks might be priced for absolute perfection, with no room for error. On the other side, you have the application companies, the ones actually digging for gold. Most of them are just burning through cash right now. And while the potential payoff is huge, the failure rate is going to be incredibly high. So, when you boil it all down, what are the crucial takeaways? First, the AI revolution is real, but the AI hype is also real, and both can be true at the same time. Second, history has shown us time and again that even world-changing technologies have incredibly painful market corrections. Third, you have to know if you're looking at a shovel seller or a gold digger. And finally, your own time horizon, whether you're thinking 5 years out or 20 years out, is probably the most important factor of all.
Ultimately, there's very little doubt that AI is going to be transformative. It's going to reshape entire industries and our daily lives in ways we can't even imagine. So the $500 billion question isn't if it will change the world, but whether it's going to create a massive, painful bubble on the way there. That's the great gamble we're all watching unfold right now.